Have you ever thought to yourself, the rich must have some kind of tax secret? Or you've heard someone else say, the rich pay no taxes at all. Well, today I'm going to explain what the rich and powerful do to reduce their taxes. And the first thing is, they get all their income paid to them in cash, and then they go hide it in the Cayman Islands. Well, maybe some of them do this, and it's probably illegal, so let's get into the legal ways that the rich and powerful dramatically reduce their taxes. Kerry Packer said it best, everyone should be looking to minimise their taxes. If you're not doing that, you're probably doing it wrong.
Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads read. Because as a government, I can tell you, you're not spending it that well that we should be donating extra.
The first way that the rich and powerful do this is that they try to limit their personal income. And what I mean by this is that their personal taxable income, they try and keep that low. And the reason for this is our marginal tax rate system here in Australia. So the way the marginal tax rate system works is that the more you earn, the more tax you'll pay on those earnings. So as you can see here, if your earnings are over $180,000, you're paying 47% when you include the Medicare levy. So almost half of your income is going to tax. The rich, they don't like this one bit. So for every $100,000 you're earning past this, $47,000 is going in tax. So obviously they don't want that. So what they do is keep their personal taxable income as low as possible. A lot of people that are very wealthy might try and cap that at the $180,000. They're like, I don't want to be paying 47%, so I'm going to cap my personal income at $180,000. Now the key to this needs to be enough for you to live off personally, but there's other ways that the rich make sure that they don't need much to live off personally. This leads perfectly into number 2, which is a lot of them are running businesses and it all comes down to the right structure. So they're using structuring to help minimize their taxes. And a lot of this is through companies and trusts. The rich really understand companies and trusts and how they can utilize them to reduce their taxes. So for instance, if they're running a business, they're going to be running that business through a company likely. And that is because the company has a flat tax rate. Now, depending on how large this company is it could either be a 25% or a 30% tax rate. But as you can see, that is still much lower than 47% that if it was all going into their personal name. So you can see by utilizing structuring, they can dramatically reduce the tax rate they're paying. Their business is also likely to be funding some of their personal expenses, whether it's their phone bill or whether it's their car expenses. There's likely going to be something that they're legally able to claim on tax, but is reducing what they need to pay to themselves personally because some of those personal expenses are already covered within the business structure. The great thing about running a business through a company is that you can dictate how much of a wage you're paying to yourself. So like I said before, when they're trying to cap their income maybe at $180,000 per the year, they can work out what they need to pay themselves weekly to get to that and know that their personal taxable income, assuming they hold nothing else, is going to be at the right level of what they've determined. And this leads really well into the third one, and the rich, they just understand tax. They really do understand their own situation, how to take advantage of all these little tax tips that I'm giving you right now, and that comes down to understanding them. By understanding structuring, understanding tax rates, by understanding any kind of tax concessions that they can get, they're going to put themselves in the best position to minimize those taxes they're paying. A real simple one of this is understanding who within the family is on the lowest taxable rate, and then working out how can they get funds to those people. So whether that's in holding their investments in a trust and therefore distributing them out to maybe a partner that's not working, or they've got retired parents or children who are over 18, they're understanding how should I structure each aspect of my financial life to ensure that I'm getting the best possible return for myself and reducing my taxes in the most efficient way possible. And some of this can get quite complex. They might have a company that's distributing dividends to a trust, and then that trust is distributing profits out to a company or to other individuals. They can make it as complex as possible, but they only make it as complex as it needs to be. They don't go and pay unnecessary fees or have unnecessary entities. Every single entity is a cog in a well-designed machine. The fourth one is donations. And you'll probably hear this and you'll see this on the news that how, big wealthy people are reducing their taxable income by making donations. And this is donations to charities and potentially political parties, although that area is capped. But the wealthy, they understand that, hey, an easy way to bring down your income is to make a donation, and quite often they take advantage of the goodwill that this donation will give them by saying, hey, look at what I've donated, giving them some goodwill, generating good hype for them, and also reducing their tax bill. So the wealthy and the rich and the powerful, they just understand how to make their money do multiple things for them. So they're reducing tax and making themselves look good. The fifth one is superannuation, and I do understand that superannuation is a great tax vehicle. Now, whether it's right for your own situation, you need to do your own research. But the wealthy and the rich, they make sure they're taking advantage of anything that's going to save them tax, and super may be a good option for them. Because when they're putting money into super, it's a tax deduction. It's reducing their taxable income. So this might allow them to distribute more income to themselves and then lower that by making that super contribution. Super is taxed at only 15%, so this is lower than that company rate and much lower than the highest individual marginal rate. So by understanding this, they're like, hey, I can park some of my funds in here and get use of that lower tax rate. Now, there are caps when it comes to putting money into super. There's concessional caps and non-concessional caps, so make sure you do research into that area. But it's definitely an area that the rich are utilizing to its full extent. You've probably heard about negative gearing, and that is tip number 6. The wealthy, and it quite often hits political news, they utilize negative gearing where possible. So the wealthy, they may own properties that are negative geared, which means from a tax point of view, that property is making a loss and reducing their taxable income. Now, this might not be a cash loss. It might actually just be a loss on paper when it comes to tax, and that's by utilizing things like depreciation to reduce the profit for the property into a negative situation, so it's reducing their tax bill. Now, why would someone do that? It sounds pretty bizarre. Like, why would you want to lose money? But they're reducing their tax bill, so they're saving tax at whatever their marginal rate is, and they're hoping to get long-term property capital growth, because a capital gain, if held for over 12 months, gets a 50% discount. So they're getting short-term tax benefit here, knowing that the long-term tax implication will be halved anyway. So again, they're understanding their situation, they're understanding the tax rules, and they're using them and stretching them to their limit.
I read the rules, said, what am I allowed to do? And that's exactly what we've done.
But the rich and the powerful, they don't do this by themselves. They know when to call in the experts. So they're utilizing tax accountants, they're utilizing lawyers, they're utilizing financial planners to make sure that they're over the top of all of this. A lot of people that are rich are running successful businesses, or maybe they're tied up in other areas. So they might be time poor, but they're not money poor. So they go out and make sure they've got the best people possible working for them so that they can utilize all of these tips that we've said and make sure that everything is working in one direction to save them as much possible, especially in the area of tax. And I think this is a pretty good segue into checking out some of the other content a tax expert like myself has on my channel. So go and do that now, and I'll see you on those videos.